Hi guys, my name is Ara and this is Rosara's Investments. Today I would like to talk about three companies that I've actually been waiting to talk about because they are crazy, they are high growth, they are risky, and they can make you a lot of money. Now, I'm not a financial advisor, but these are three companies that I personally own stock in. So I'm not recommending them to you guys, but if you want to take a look and do your own research and make your own decisions about investing, please feel free, because I think these three companies are exploding. They are growing, they are adding users, they are growing revenue. So without further ado, the first company that I'd like to mention today that I absolutely think could be a 10-bagger. This is a $2 billion company as written right there, and I think it could easily go to $10 billion or $20 billion within a few years. So the company is BIDU. I apologize if I'm pronouncing that wrong. I have no idea how to pronounce that, but the ticker symbol, let me write that down. Ticker symbol is BZUN. BIDU is a very, very exciting company, mostly for me because it's only a $2 billion company, and this is a very, very high growth company. So just to run down the numbers on the board really quickly. The price of this company, recent price was about $36. As I said, this is a $2 billion company total. It is based in China. It has a very high PE ratio of 111, and compared to most other stocks, that's very high. Compared to other Chinese stocks, that's very high. Compared to anything, that's very high. But I'm willing to take the risk because this is such a small market cap company. They have some very good brands under their wing that they're helping. And I just love this company. So right now they have cash in the books of $92 million and they have zero debt. I love investing in companies that have zero debt, okay? And as far as revenue growth, they are growing. And what I did for the 20% revenue growth is I took the amount that they made last quarter compared to the quarter that they made 1 year ago. Because depending on what type of revenue you look at, if you look at the last 12 months or the previous 12 months, it could be different. But what I did was I looked at the last quarter and the quarter 1 year ago. So 20% revenue growth. Right now their EBITDA growth is 0 and their net income growth is 0, which means they're growing faster, revenue faster than they're growing earnings. But this is such a small company and some big name companies and brands are using them. So I'm just going to read off a few of the companies that are using BIDU for their e-commerce solutions, okay? So Aldo, Microsoft, the NBA, Oakley, sunglasses, Samsung, everyone knows Samsung, Godiva, the chocolates, Coach, the handbags, and Guess, the brand that makes jeans and all kinds of different products. So those are some of the companies that are using BIDU for their e-commerce solutions. This is an incredible company, and I feel like getting in while the valuation is only $2 billion is a great, great time. So the second company on the list is YY.com. Raise your hand if you've heard of them. I'll write it down. Ticker symbol, YY. This is also one of my top 3 favorite companies to invest in. This is the YouTube of China. Imagine getting the chance to invest in YouTube before everyone was using YouTube. Now, I say before everyone was using YouTube, but YY currently has over 300 million users. So it is not a brand new company. But still, it has a price of $138 and the market cap is only $9 billion. So I think this is a company that could just explode. I think this is a company that could go to $90 billion valuation. Why not? So YY has 2 main divisions, and the main divisions are Huya, H-U-Y-A, which is a streaming service for gamers, very, very similar to Twitch. It's been compared to Twitch. And the other division is YY Live, and you can see that at YY.com. So that is more like a presentation, like girls dancing and stuff like that. It kind of has a YouTube feel to it. So anyway, to go down the numbers real quick, the PE ratio for YY is 24, which in my opinion for such a great growth company is very, very low. I mean, this is the stock to get into, okay? So it has $1.3 billion of cash. That's amazing. And it has you can see it right there, $1 million in debt. $1 million. 3 or 4 quarters ago, they had 0 debt. But now they have $1 million in debt, which for them is absolutely nothing. So the revenue growth right here, the revenue growth is 53%. My God, that's fast. Earnings growth, EBITDA growth is 51%, and net income, otherwise known as earnings, is 65% growth. 65% growth. This is only a 24 PE ratio. It has 65% earnings growth. So they are talking about a possible spin-off of the Huya division. I hope I'm pronouncing that right. But let's say it spins off. Who knows? Imagine how great it would have been to invest in eBay before they before they spun off PayPal. And that was wonderful. Imagine investing in Philip Morris before they spun off Altria and Kraft. I know some people that have done that and they made loads of money. So it's so great investing in, one, not only high growth companies with low PE ratios, but two, companies that are going to spin off other companies. So in my opinion, this is a fantastic investment. I am definitely going to be in this company for the next 5 years. So that leads us to the third company, which is also going to have a spin-off, or so we are hoping, hopefully in 2018 or 2019, who knows. But the third company on the list is BIDU. B-I-D-U. Let's write it down. B-I-D-U. BIDU is currently trading at $255. It has a market cap of about $88 billion, which by market cap terms puts it as a large cap company. And you can compare BIDU to Google. BIDU could be the Google of China. So lots of Chinese customers use it as a search engine, and they make the majority of their revenue through advertising. So currently right now it has a PE ratio of 32, a forward PE ratio of 26, which implies high growth. I think this is a company that's being underestimated in their growth value, okay? Cash, $20 billion. This is an $88 billion company that has $20 billion of cash. That's a quarter of its market cap. I don't know if these numbers are real, but that's what they're saying. That, you look on Fidelity, it has $20 billion of cash. So, why not? Let's believe them. Everyone's getting into this company. The stock chart is going up, 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 up. So they only have $6 billion of debt, long-term debt, which is fantastic. The net of those two numbers is $14 billion. So they have a fantastic balance sheet. And I hope the numbers are true. I've been lied to before, but I think BIDU is definitely a big enough company that I think there's been plenty of people that have looked into this, and I do believe that the numbers are true. So $20 billion in cash, that's amazing, guys. Okay, so the revenue growth is 33%. This is a company that has a PE ratio of 32 and revenue growth of 33%. That is less than a PEG of 1, okay? That is less. That is such a low PE ratio for this company. What that means is $255 is cheap for this company, considering they're growing at 33% right there, and they only have a PE ratio of 32. This is cheap for this company. Plus, BIDU is going to be spinning off one of their companies. I don't know how to pronounce this. I'm going to try. IQIYI. Ikiwi. They're going to be spinning that off. And so Ikiwi, and I need to mention that in this video because it's so important, Ikiwi is like the Netflix of China, okay? BIDU owns 80% of that company, and if they have a US-based IPO, which they're expecting to at the end of 2018, is my best guess from what I've read, this could be a $10 billion IPO. We could be getting in on the ground floor, well, ground floor for us, because this is our first time to own shares of Ikiwi, not through BIDU, but we could be getting in on the ground floor of owning this fantastic streaming service. So not only is this the Netflix of China, but Netflix licenses some of their shows to Ikiwi. One of their shows that they were not allowed to show was BoJack Horseman, which was kind of a funny show that I watched on Netflix recently while I was doing my research. So that was the reason why I watched BoJack Horseman, which is pretty funny. You guys should check it out. It's not for everyone, but I guess it was too harsh for their Chinese customers. So anyway, BIDU grew their earnings. Well, first of all, they grew their EBITDA at 60%, which is absolutely ridiculous. And they grew their earnings at 162%. They more than doubled their earnings from the quarter 1 year ago. I don't know how much faith I put into the sustainability of this number, their earnings growth, because BIDU does have some revenue from other sources which aren't directly from their core earnings. So I would probably, for a long-term growth rate, I would probably look at something like the revenue growth, which is why I made a mess over here. So I would say 33% is probably a good number to estimate if you want to figure out how fast the company is going to be growing. So anyway, these are my top 3 picks. They are not for the faint of heart. I would not recommend these 3 stocks to my mom. And I'm not a financial advisor, but I do control my own money. I do manage the money for some of my friends and my family. And I do think that if you want to put a small amount of money into each one of these 3 stocks, I think you will be doing fantastic 5 years from now. So thanks for watching. If you did make it this far, it probably means that you liked the video. So because I'm a new YouTube channel and a new creator of content, please share the video for me. I would appreciate it if you would share the video for me so much. Thanks so much and have a great day.